Your credit score is probably the most important thing taken into consideration when you're applying for a loan. It's going to impact several areas of your loan. And the bottom line is if your credit score is too low, you won't qualify. So, what is a credit score anyway? Well, a credit score is a compilation of all your credit history, your ability to essentially pay back all the debt you've ever had. So, you take your auto loan payments you've had, your credit card payments, student loan payments perhaps, and all that information has been reported to the three credit bureaus here in the United States on a monthly basis, and they take that information and they run it through their scoring models, and they assign you a credit score. Now, scores range from 850 to a high, all the way down to 350 for a low. And in the mortgage industry, we've talked about this before, the gold standard is 740 or higher. Now, how do you keep your credit scores high or get them high? Well, the number one best thing you can do is to pay your bills on time. That's it. It's that simple. Pay your bills on time. And the second thing is to manage your revolving debt. Now, your revolving debt is your credit cards. If those balances are too high compared to the limit on that card, it's going to drive your scores down and keep them down. All right, so pay your bills on time and manage those credit card limits, those balances, and you'll have great credit scores. I hope this information helps you. My name's Greg Kisiel. I'm a senior loan officer, and this was your Mortgage Minute.